Is it a journal or is it a ledger? I always get those two confused. Today we're going to sort that out. Welcome to Accounting How To. I'm your host, Carolyn Grimm, and that's my sidekick, Terrence. We're here to put the fun in accounting fundamentals. Now, often when we hear the term journal now, we think of a book where we record our hopes and fears and dreams. But long before people had the luxury to sit around imagining their best life, journals were being used to keep track of transactions between businesses and between neighbors. So, in accounting and business terms, a journal literally means that which takes place daily. It's a book for inventories and daily accounts. It's the ancient practice of keeping the books. So, keeping track of transactions was critical because most transactions weren't done using cash. Barter was far more common. You'd exchange labor with a neighbor. You'd help prepare his field in the spring in exchange for him helping you cut timber in the fall. Now, if you had a neighbor who kept poor records, and you know that happened, you'd end up with arguments and bad feelings. And ain't nobody got time for that. So you would carry your journal around with you as you moved through your day, and you'd write down transactions as they happened. So here's an example of a daybook, a journal in olden times. Paid taxes with cash money. Cut timber for Mr. Bradford, who paid 3 cords of firewood. Repaired the roof for Goody Allen, who paid with 1 wheel of sharp cheese. Received 3 days' labor from Deacon Peabody to till the lower field in exchange for the same at a later date. Granted mortgage to Widow Freeman to be paid in 1 year. Sold eggs to Mrs. Olson at the mercantile on account. Then, back at your desk later on, after you've had a good meal with the missus, these transactions would be taken from your daybook, your journal, and then they would be entered into specific accounts, your ledger. So in your ledger, you would record that you paid your taxes to the town. You would be able to see the taxes that you previously paid, so you know that you have paid your taxes every year, and you would be showing how you paid for it. You paid for it in cash. You would record in Mr. Bradford's account that he paid you 3 cords of firewood in exchange for your labor. You'd record that you repaired the roof for Goody Allen in Goody Allen's account, and how she paid you was with that wheel of sharp cheese. You would record that you have received 3 days of labor from Deacon Peabody in his account, and that you still owe him for that. You still owe him 3 days of labor at a later date. And you would record that you have granted a mortgage to Widow Freeman, so you gave her the money, and she's going to repay that later on. So you have mortgage receivable now, and you have less cash. And of course, you're going to record that you sold eggs to Mrs. Olson at the mercantile, and that you are going to be receiving that payment later on in the form of goods. So once you've recorded all of these transactions in your journal and then transferred them to your ledger accounts, at some point in time, you're going to get together with those different people that you have accounts with, and you're going to settle up accounts. You're going to sit down and say, well, Deacon Peabody, this is where we're at. I've got this that you owe me. You've got that I owe you. And you're going to make a determination as to how that amount's going to get paid, or that you're satisfied the debt has been paid on whichever side it's on. Now, today's daybook might be a paper notebook, or it could be a computer app. But the intent is still the same. You're keeping track of your daily transactions so that nothing gets lost. And then you're going to enter that into your account ledgers in order to keep track of who you owe, who owes you, what you bought, what you sold. So a journal is where the original entry is made, the day-to-day entries, the journal entries. And then a ledger, an account ledger, is where we track the changes to the balances of every account that we have. Who do we owe? Who owes us? How much cash do we have? How much inventory do we have? And there you have it, the difference between a journal and a ledger. Until next time, stay balanced, my friends.